Welcome back to Young Money Investments. In today's video, we're going to be talking about probably one of the most talked about and popular trading topics on all of YouTube, and that is natural gas futures, specifically trading UGAZ and DGAZ, and how a lot of new traders tend to lose a lot of money while trading UGAZ and DGAZ, while a lot of the more famous and popular YouTubers soon to be making hundreds and hundreds of thousands of dollars every year trading this ETF. Today, I want to talk about what natural gas is, why it's valuable, kind of where it comes from, and most importantly, how you can save yourself some of the headaches that a lot of traders have to go through in order to finally become profitable trading these ETFs. All today on Young Money Investments. So obviously one of the most important things when learning about a particular company or ticker, future, whatever it might be, is understanding why is that a valuable commodity or company to buy into. So natural gas is a fossil fuel that is formed from dead plant matter trapped between rock deposits deep beneath the Earth's surface. Its main component is methane, which is a chemical compound of one carbon atom and 4 hydrogen atoms. If you didn't pay attention in organic chemistry, that probably doesn't mean a whole lot to you. But even for me, who was a biology major, it still isn't that important anymore. Basically, all you need to know is that natural gas was formed millions of years ago and is the remains of dead animals and plants decayed from formed thick layers of organic matter that mixed with sand and silt. Over time, additional deposits of sand and rock covered this material and buried it deep beneath the Earth's surface, as you can see from this diagram right over here. Now, one of the most important topics is what drives the price of natural gas. There are a few factors, mainly 5, that determine what the price of natural gas is going to be. Those are how much production is being made, the weather outside, global economic growth, how much supply is in storage, and what substitutes for energy are out there, such as wind, coal, solar, etc., etc. So for example, here in the United States, most natural gas consumption derives from domestic production. We make the natural gas right here, develop it in the good old US of A. Since natural gas transportation requires pipelines, most other countries rely on domestic production or imports from neighboring countries. LNG can also be transported without pipelines. LNG stands for liquid natural gas. In recent years, US prices for natural gas have been strongly correlated with production. During periods when production increased, consumer prices for natural gas fell, whereas declines in production produced higher prices. That's one of the main reasons right now, if you take a look at the natural gas chart, you're gonna see that overall, it's pretty low. And when I say low, I mean it's lower than how deep your dog buried its bone last night in the yard. You might want to go check that. But for real, our price right now in the dead of winter is cheaper than what it was during the summer. How does that work? Well, cold weather doesn't really affect natural gas prices as much as you would think. Weather does affect it. Hurricanes or storms can curtail drilling activity and create supply shortfalls. Severely cold weather can also limit production and cause prices to rise. But just because it's freezing cold outside does not necessarily mean that buying UGAZ is a dead giveaway and going to earn you lots of money real quick. One thing that I was kind of surprised to find out is that really one of the biggest driving factors for natural gas is the number of cubic tons of natural gas that are stored in underground storage tanks here in the United States. Supplies of natural gas held in underground storage facilities can impact prices, especially during periods of high demand. Storage can provide supplies of natural gas when domestic production and imports are not high enough. During periods of low demand, storage facilities can absorb production and prevent prices from falling too far. Now, normally natural gas prices in the United States rise from April to October when demand is lower. They then decrease from November to March when demand is higher. However, and this is the kicker, however, in recent years, storage supplies have been increasing in the beginning of November to stop the rise in natural gas prices. That makes more sense. One more thing I believe that is affecting the overall price of natural gas is the alternative energy sources. Natural gas competes with other sources of power, including coal, solar, wind, and hydroelectric power. Coal, for example, often competes strongly with natural gas on price. One of the big things to keep in mind, though, is the fact that coal is not as clean of an energy supply as natural gas is, and obviously it creates a lot more pollution than natural gas does. Now, based on this chart right here, we can see that obviously the United States is one of the top producing regions of natural gas. We produce roughly 766 billion cubic meters of natural gas. annually. Russia, on the other hand, does 598, Iran does 185, Qatar does 164, and Canada at 150. Now, one thing that is super interesting is who has the most natural gas. You might ask. Russia comes in by far and away with the most natural gas. Russia has nearly 47,800 billion cubic meters of natural gas, followed by Iran with 33,500 billion cubic meters. You guys, that's so much natural gas, it's crazy. Qatar, then the United States, way down there at number 4, and Saudi Arabia coming in at number 5. One more crucial thing that you need to know about natural gas. The electric power sector accounts for 36% of natural gas demand. More than 27% of US electricity generation takes place using natural gas. Literally, they have power plants that generate power based upon natural gas. It's pretty cool. The industrial sector accounts for another 34%, residential sector accounts for another 16%, commercial accounts for 11%, and the transportation sector accounts for a little tiny portion of 3% of the overall production use. And one more thing before we continue, please smash that thumbs up button, hit that subscribe button. I know like 90% of you don't even subscribe. I'd love to have you around for more great content here on the channel. So if you have been trading natural gas, you've probably noticed that Thursday is probably one of the most volatile days for trading natural gas. And that's simply because of the natural gas report. The EIA natural gas report is a weekly report provided every Thursday by the Energy Information Administration, also known as the EIA. The report applies to natural gas reserves that are stored underground in the US. The amount of natural gas stored in inventory is a primary determinant of natural gas prices. Each report lists the data gathered from the previous week. So basically, how do you break down the EIA report? The EIA natural gas report provides a current reading of the law of supply and demand. It applies to natural gas reserves just as it does with any other commodity. When reserves are low, prices increase and vice versa. Therefore, investors use reserve reports as a means of anticipating price movements. The EIA natural gas report is the preeminent natural gas report here in the United States. One of the important things to remember with this as well, though, is as it said, it's a speculatory move. The reason why a lot of times, even if the price action, let's say, it's really cold, let's say production has been cut, but the price doesn't really actually go up. Why is that? Well, the reason is because a lot of this is speculation. A lot of the plays that happen and occur with natural gas is speculative. There's a lot of other people out there, usually with a lot more money than you and I have, and they are actually speculating before you and I actually get into it. And so what happens is, even if the report is, let's say, positive for natural gas and there's going to be more natural gas out, you would think that DGAZ would go up. Well, if it was already priced into that movement, it's actually going to go opposite, and that's where it can really mess with the mind of a new trader. So basically, UGAZ and DGAZ is an inverse ETF that is used to be able to trade the futures of natural gas without having to actually trade the actual futures contract. You can actually buy shares of this ETF, and that's how you actually make money. Now, one of the crazy things with this, though, is that with it being 3x leveraged, this has to get balanced on a daily basis. So what does that mean? It's a balanced ETF. Well, the price of natural gas obviously fluctuates every day. And in order to keep the ETF balanced at a 3 to 1 ratio to what natural gas prices are doing, they have to rebalance that portfolio on a daily basis. Because of the rebalancing, it can really affect your portfolio and your overall position in either UGAZ or DGAZ. For example, let's say natural gas goes up by $3. You guys would end up going up $9 because it's 3 times that amount. Now, the problem with this is that the following day, it has to get rebalanced so that it is actually still at a 1-to-1 ratio in the ETF as it is with the actual price of natural gas. So if you didn't get out on Monday and held through to the next day, it's very possible that your overall gain will not be what it was the previous day. Now, what's problem number 2? Problem number 2 is that most of the volatility occurring in DGAZ and UGAZ occurs after hours. One of the bad things, obviously, with trading or swing trading UGAZ and DGAZ is that because it is balanced on a daily basis, you can forfeit a lot of profit. So a lot of traders will recommend that you do not end up holding it overnight. Problem is, when you don't hold overnight, you miss out on a lot of the price action. Take a look at the charts here, for example. This is UGAZ here on a daily chart. These are going to be daily candles here. And as you can see, the movement happens between the days. As you can see here, just on 12/2 and 12/1, you can see the gap down here was literally a 15% gap down. Again, if you were to look at it over here as well, let's say you were right here and you were to ride this and it gapped up, you're looking at a gap up of roughly about 4%. So one of the problems, or here even, you can go back a little bit further back into November, and here's a gap down of 13, nearly 14% in one day. So the problem with this is that if you're not in this particular ETF during after hours, you're going to potentially miss out on a large movement. The other reason why I think this is not so great for a lot of new investors is because you then believe that you have to get in this and hold through overnight, and that's where it can get really risky, and you can be down 10% just in 24 hours, or even worse. So now you're probably going, Cameron, okay, how do I make money on this? So now knowing how to make money, the first thing you need to do is first not use UGAZ or DGAZ as your charts. You need to use either /NG, or I personally prefer right now during 2019 to use NGZ19. And then obviously when you switch over to the next year, you're going to be NGZ20. So right now you can see actually what natural gas prices are doing, and this gives you a much better idea of where natural gas is, as opposed to UGAZ, as you saw previously. It's a decaying ETF. The value of this ETF just continues to go down and down and down and down. So you have no way to do technical analysis off of this particular chart pattern. Now, obviously, as a good rule of thumb, it's great to normally be buying UGAZ during the winter, but as you can see, right now with the way supply and demand and some of the other extenuating factors, UGAZ has not been a great buy. And one of the things I can't stress to you enough is to not try to buy too early and go against the trend. Trying to dip buy natural gas or any of these futures trades like this, it's not a great idea. Instead, I recommend always trading with the trend. As they always say, the trend is your friend. If I were looking at an entry though on UGAZ or trying to get in on a bullish natural gas movement, I would look for a buy right down here around 2.41 on the chart on NGZ19. If movement goes against you, you're going to want to get out at least at 2.39 and not any lower though. Not worth it to risk it. Now, as a general rule of thumb, is it good to buy DGAZ during the warmer time and UGAZ during the colder months? Absolutely. But overall, I just want to point out the simple facts that you need to be looking at more things than just the weather and the natural gas report. You need to understand the whole holistic overall approach and picture in order to be profitable in natural gas. And real quick, if you haven't done so already, comment down below. What are your thoughts on natural gas? Where do you see it going? Everyone would love to know down below, because there's a lot of other viewers that will watch this and go, I want to know more, and they scroll through the comment section and they'd love to see yours. It adds a ton of value to this video and I greatly appreciate it. I hope you found this video helpful, and if you did, please smash that thumbs up button. Please subscribe. I know like 90% of you don't subscribe. You just watch the videos. I'd love to have you around for more technical analysis and more stock videos. Can't wait to catch you in the next one. Talk to you later. Bye.